There's only two guarantees in life: death and taxes. And the latter can be scarier than the former, especially for freelancers and entrepreneurs. So, in this video, I'm going to share how I stay prepared for tax season as a freelancer. If you're new to the channel, my name is Hassiem Muhammad. I'm an award-winning actor. I've been on TV. I've performed on stages around the country. And although I'm not rich or famous yet, I am a working actor who supports themselves as a freelancer. Now, today's video might not be super helpful for those of you who are stressing about tax filing this April, but I figured January was a great time to begin implementing some new habits and strategies that will help you be ready for tax season next year, because the strategies I'm about to share are things that I do throughout the year. And to clarify, what I'm about to share is just what has worked for me. I'm in no way giving any professional tax advice to those of you who may be watching. So the first thing I do to make sure I'm prepped for tax season is I save for my taxes monthly. For some folks, saving weekly may be better. For me, I do all of my financial planning and budgeting and balancing at the end of every month. That just is what works for me and my brain. And the important thing to remember is that folks who have a salary, who do W-2 work, they pay taxes, but they don't pay all of the taxes. Their employer takes some of that tax liability and pays it on their behalf. As freelancers, as 1099 employees, there's no employer to take out taxes for you. Not only that, but also they're not paying their portion because they don't exist. You work for yourself. So it's super important to save throughout the year so that when it comes time to pay your taxes, you have the money. In my bank account, I have multiple accounts, and one of them is just for taxes. So what I do is every month I put aside 20% of anything that I made as a freelancer, any of my 1099 income that's being reported, I put it into that taxes account. Now, the next point, which kind of connects to my first point, is that I pay my taxes quarterly, or at least I did this past year, which is my first year paying my taxes quarterly. Historically, I did not do so, and I'll tell you why. So I used to do my accounting through H&R Block because they have this peace of mind guarantee. So like if anything gets screwed up in my taxes or if I get audited, they have to handle it. And I'm a big like peace of mind person. And I was like, look, I'll pay a little extra just so that I know if I get audited, I don't have to worry about it. This is not an endorsement of H&R Block. I'm just telling you my thought process. I no longer do my taxes with them because they were really annoying. When I was filing my taxes with H&R Block, I sat down with the accountant and, she was looking over my stuff and she was like, well, why didn't you pay estimated taxes throughout the year? Now, this was a few years ago. I was a lot younger. One, I didn't know you had to. Right? I was like, well, I'm gonna pay it now, right? The bill owes at the end of the year. And what she expressed to me, which is true, the way that the federal and state government see it, you owe taxes as you make money. So, for example, whatever money I make in January, I immediately owe taxes on that money. Now, they're a little lenient and they only expect you to pay taxes quarterly. So, as long as every 3 months you pay your taxes as a freelancer, as a 1099 employee, they'll stay off your back. If you don't, what happens is that there are penalties and interest is accrued because technically you're late to paying your taxes. Now, I asked my H&R Block person, I was like, okay, well, how bad is the penalty? And that year, I remember it was something nominal, like it was less than $50. And I was like, you know what? I'd rather just pay like the $50 penalty instead of having to keep track of like my quarterly tax payments and going online and filing and all this stuff throughout the year. I'd rather just do it all at the end of the year. Well, that worked until I started making a little bit more money. And this past year, I went to file my taxes and I had my bank account where I had saved throughout the year, and I was feeling pretty good. And I was like, oh, don't worry, I got it. Just let me know how much I owe. And I owed $500 in penalties and interest because I did not pay throughout the year. Lesson learned. So for 2024, I paid my taxes. Well, I may have missed that first quarter, but I paid my taxes every quarter. And what's cool is like if you do forget, it's not the end of the world. Like actually yesterday, I just went on and did my taxes for last quarter. You can always pay for like your current quarter and the quarter before. So really, as long as you remember every 6 months to pay your taxes, you'll be good to go. And for me, I already know that this is going to help me save some money because I know I'm not going to owe that $500+ in penalties and interest this year. Now, again, you may be asking, well, how much should I pay quarterly? My accountant recommended that I pay 16% of my gross income to federal taxes every quarter and 5% to the state of New York because that's where I live. So that comes out to 21%. Like I said, I save 20%. That's going to connect to our third point, which is I know I'm going to get some deductions. So I know I'm safe at 20%. Anywho, back to the topic at hand. If you live in the state of New York, which if you're a freelance artist, there's a ton of us in New York, so you may be watching this. Just a quick point. You have to pay state and city taxes. So what my accountant recommended that I do is take that 5% that I'm going to pay towards the state, and 25% of that I pay towards the city. So 3/4 is going to the state, a quarter is going to the city, 16% of the 21% is going to the feds. Hopefully all this makes sense. And another added benefit of paying taxes quarterly, aside from not having to owe penalties or interest on your tax liability, is you're just not going to get hit with one big bill at the end of the year. Like, I'm expecting to go into my meeting with my accountant next month and hopefully not owe anything. Best case scenario, be due for a refund. Worst case scenario, maybe I was off by a couple $100 and it's okay because I still have that in my taxes account. Yes, you heard me correctly. You may be wondering, well, if I'm paying quarterly and it's an estimate, what if I overestimate? What if I pay the feds or the state too much? It's okay because you'll get a refund. So all of your friends who have W-2 jobs, you hear about them getting refunds all the time. It's only because they've been overpaying. It's not like some kind of glitch. It's not actually like an unfair thing that they're benefiting from that you're not. It's just likely that you're underpaying and they're overpaying. Hopefully for me, I overpaid this year. I'll get a little money back, but honestly, I'd be happy with just them saying, yep, you're good. You paid enough. And the third way that I prepare for tax season is by tracking all of my business expenses so that I can deduct them from my total income, or at least from my taxable income. What do I mean? Every adult in the United States who makes above a certain amount gets a standard deduction on their taxes. So for a single person, the amount is $14,600. For a married person filed jointly, it's like $29,200. Like just off the top, from doing nothing but existing and making an income above those levels. What this means is that your taxable income is less off the rip. And if you are a business owner, an entrepreneur, even if you don't have like an LLC or anything, if you're an individual who makes income that's not from a W-2 source that you are reporting, you get to report business deductions and get to lessen your taxable income. For example, I'm an actor. Some of the things that I keep track of to deduct at the end of the year, I deduct 20% of my phone bill because a lot of conversations I have on the phone are with my agents and managers. So part of my phone usage is for business. I deduct 50% of my internet. Most of the time I'm on the internet, it's for my career, right? I'm working on acting things. I'm working on the podcast or some of the other freelance gigs that I do. I deducted my podcast equipment last year. All that stuff, I'm going to write off. Tickets to see shows. When I go to see a Broadway show as an actor, however much I pay for that ticket, I track it. I'm deducting it. It's research. Union dues, gifts that I send to my agents and managers, all that stuff is deductible. And I just keep a track of it in a spreadsheet. And I just export the spreadsheet at the end of the year, send it to my accountant, and she does all the hard work. So I know all this can be a little confusing. Let me give it to you like hopefully super simple. Let's say you made $50,000 as an individual, you're not married. And let's say out of all those things I listed between some of your utilities that you use for your business, maybe tickets to show, maybe gas you pay to drive from your gig to gig, gifts, maybe you paid for lunch to meet with a client, all that stuff you keep track of and you deduct. Let's say it amounted to $10,000 in business expenses for the year. When you take that $10,000 plus your standard deduction of $14,600 from your $50,000 income, that leaves you with a taxable income of $25,400. Almost half. So again, imagine you were paying 20% of taxes on 50K. Okay, that's a fifth of that. That's $10,000 in taxes for the year. Well, now it's half because of your deductions. So this is a major, I can't stress enough how much money I've saved by tracking my business expenses. And again, anything that relates to my business as an actor or any of the other freelance gigs I do, whether it be teaching or coaching, I'm writing those expenses down. I just export the spreadsheet and boom, she takes care of that. So again, how I make sure to stay prepared for tax season, I save 20% of all my 1099 income. I put it into a tax bank account. That's the only money that's in there. Every 3 months, I pay a portion of that to the federal and state level to make sure I'm not accruing any interest on a balance that exists. And finally, I keep track of all of my business expenses so that they can be deducted from my taxable income at the end of the year. And that's going to save me a ton of money. If this was valuable information for you and you like some more financial guidance, then I highly recommend you check out a recent video I did on avoiding debt at all costs. And of course, before you go, make sure to like the video, subscribe to the channel. When you do these things, it lets us know what content is resonating with you so we know what to make more of. All right, y'all, till next time. Peace.